Top of the morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with the morning market preparation video for June 20th, 2018. Hey everyone, this has been a challenging market, no doubt about it, as we're just continuing to be politically charged, getting a lot of movement in the market. But what's been good is that the bulls have been fighting back. So we've been, in the last 3 days in a row, we have gap down in the Dow. Now the Dow has been taking the brunt of this selling. And yesterday was kind of technically damaging because at least as I've drawn this trend line, we have broken that trend line. However, we do have the benefit that we held on to that 50-day moving average. We temporarily broke that yesterday morning, but by the end of the day, those bulls fought back, pushing this back up above that 50-day moving average. And this morning, we're actually seeing a triple point gap up. You can see the market is looking to gap higher this morning. Now, in my morning blog today, I wrote about the dangers of chasing a gap, and it's something that I had a real problem with. In fact, the only way I really got over that habit is an awful lot of hard work with a trading coach mentor to resolve that problem, because I was pretty undisciplined. I didn't do well in my plan or my planning, and I had to work with someone and really convince myself by collecting a lot of data that I was being led around by my emotion. And it was common that I would chase a gap like this. I would chase a gap down and then ultimately end up being punished as the market rallies back, adding insult to injury on a gap up morning like today, in a situation if I would have stubbornly held on to that position. And then it's equally as wrong to chase a gap up, particularly in such a politically charged market. We could flip back, right back down today on any news. So what we need to do is get disciplined in our trading, have a plan, build your trading off that solid foundation. If you don't have a plan, get yourself some help and look for a way to improve that situation. Don't be subject to undisciplined trading. It will cost you a lot of time and money. Trust me on that. I was there. So having said that, here we are this morning facing a gap up, a triple point gap up. The market is certainly bullish. Should we be rushing in to buy stocks this morning? My answer to that is no. Unless you have stocks that are already set up for trade, and I mean stocks that are trending, good-looking stocks that are moving like you would like to see them do in concise and deliberate price action. You don't want to be chasing the stocks up. It's equally wrong than, as chasing a gap down. So what you want to do is you want to look for good quality trades to follow along with. If you need some help with that, please get a hold of someone that can help you get on the right track. Taking a look at the market today, this unbiased look that I try to take a look at the market today, it is a wonderful thing that we've held on to that 50-day moving average. Now we need to prove that we can hold on to that. We need that follow through, and the gap up is not the follow through that I'm talking about. I'm talking about after that gap up. After that gap up, if we actually see buying come in, not just the big guys pushing the market around here in the morning, but we actually see real buyers stepping in after the market open to really push to the top side or the upside on that trade. That is what we want to follow. We want to follow that real price action, not chasing the morning gaps. So looking at this, we do have a risk here in the Dow, and that is on this gap back up. We certainly, if we fill this gap, let me go to a chart here without all the moving averages on it, we could certainly gap up into here, fill this gap down right here, rally up into here, boom, and fail. That's not an uncommon pattern. So you want to be aware of that about chasing into that kind of gap. We could just be filling this lower gap before we start heading back down. We could also pass right on through there. We could run right through right up here to 25,000. And look how many times 25,000 has been a difficult area to get through. So we want to watch that real closely in case we get a failure in this area. So be careful of chasing into that trade. It is wonderful if you're in long trades. It's wonderful to see the market responding higher. Now, the good thing is the Dow has taken the worst of this, and the SPY is actually looking much better. SPY a lot stronger. The SPY actually held on to this support. Held on to that price support area, held above its 50-day moving average, and a follow-through move up this morning could actually be a little bit showing some bullishness in the market if we get that actual follow-through, some real buying after the gap. And you can see we have some resistance right here that we have to worry about, price resistance. In the price action, we'll want to watch that area, and of course we'll want to watch this area as potential areas for failure. But let's hope those bulls kind of hang on, and let's hope some of the cooler heads prevail in this whole so-called trade war, and we can finally get back to some good trading here without all the political uncertainty that's circulating it right now. Good news is we're holding trend. We've held support here in the SPY. So the SPY looks pretty good here and pretty strong if we can continue to see that some of those bulls push and follow through. If we take a look at the Qs did a great job yesterday. Gapping down, holding below this support level initially, and then rallying back up to recover that immediately in that support area. Now, we do have to recognize the fact that we're in a current 4 days in a downtrend, and this follow through this morning could be, just, that gap up that traps traders in this before we reverse and go back lower. But I think we have a really good chance of holding, at least at this point, we're showing that chance here. Bulls holding on to this. And also remember, we have a trend. So don't think that even though we're gapping up this morning, that this means we're going to immediately just move up to new highs. We could easily move sideways here, or bounce around in this range until we come back over here to the trend. Notice that's what we've done in the past. We keep coming back to trend after the move up. So it wouldn't be out of the question to see us kind of bounce around and consolidate and move back toward that trend. And I got to tell you, this IWM has been remarkable. Showing tremendous strength. Obviously, there's very little risk here with domestic small caps. They're not international companies when it comes to trade wars and that kind of thing. And so the IWM has stayed very, very strong, actually eking out by a few ticks a new record high close yesterday in IWM. So looking really, really good. Let's take a look at the VIX. The VIX gapped up yesterday sharply, and then slowly throughout the day pulled back. And my guess is this morning it will actually pull back further with this gap up. Morning we'll be back down in this little box that I've drawn around here. This really tight, concise price action as the market's just trying to figure out what to do here. So we had some fear creep in. Looks like that's slowly starting to fade back out. And if fear starts fading back out and those bulls happen to step up and really push for those higher prints, we could see that fear ebb even more. Let's take a look at T21.22. That 4-week new high, new low ratio. You can see we pushed down pretty sharply yesterday. in that 4-week new high, and we're getting really close here to that mid-range, that 50-50 point where we could really move either direction. But the good news is, with the gap up this morning, we do have plenty of room to the upside to move higher. You just want to be careful about chasing that gap, just in case it's just one of those gap up and fail situations. I used to call them pop and drops, where you'd pop in the morning and then sellers would come in pushing it right back down. So be careful of that. But we do have room to move both to the top side and the bottom side here. We're a long ways away from those reversal zones. Let's take a look real quickly at the economic calendar. A couple things on the calendar to potentially move us around today. Existing home sales at 10 o'clock can certainly move us around. They're expecting that to have a little bit of a rebound, a little bit of bounce back from a little bit of a slip last reading. And the EIA petroleum status report comes out, which has been supporting oil prices pretty well. But now with the threat of OPEC changing production levels, that could move things around a little bit. So we'll want to watch that. There's also Fed speakers today, but it's unlikely that they move the market around. We also have 19 companies reporting earnings today, but really probably the biggest company or the most noteworthy company would be MU, reporting today after the bell. So kind of keep that in mind. Hey, with that, everyone, I want to wish you all a fantastic day. I wish you great profits. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube. Click the follow me button on Facebook. Click those thumbs up buttons and drop a comment. I really appreciate those comments. You guys are awesome. And I do try to respond back to as many of them as possible. And if this is something that you think could be helpful to other friends and family, please always feel free to share this video. Everyone, take care. Have an awesome, awesome day. We'll talk to you all bright and early Thursday morning. Take care.